All right, good morning, everyone. It is 8:28 on the morning of December 30th, 2022, and this is my pre-market strategy session. Today is the last trading day of the year 2022, and being that the entire year has been in a bear market, this is the let's see, that's December of 2021 right here at the top, and it's been a down year if you can't tell. Pardon me, and pardon my voice. It appears that I'm getting a little bit of a cold. It's nothing terrible so far. So yeah, today's the last trading day of the year, and in my experience, the first trading day of the year, which will be January 2nd, is always bullish. Um, so, you know, all right. Let's take a look at a couple things here. The title of the video is QQQ gets support, bear market rally incoming. Now, there are a couple of things here that I really want to zero in on. And the first one is the Fibonacci level here. So you can see these colored zones right here: red, yellow, green. That I don't know, light sort of bluish green, and then blue, and then it goes into just sort of dark right there, gray, gray color. So let me clean up this chart a little bit here. Where are my? There it is. Here's my layers. Okay, let's make this horizontal ray go away. Make that one go away. Make that one go away. I'll just get rid of these brush marks. Let's see, fib. Yeah, we want to keep you. Let's get rid of, where's that? Here's the trend line. And so, okay, that leaves us with just the Fibonacci. I'm going to take this down up to the monthly. And so one of the world's most favorite Fibonacci levels is this 38.2 or 61.8. I mean, it's really this, it just kind of depends on which way I draw the Fibonacci. It could be the 38.2, which is just sort of the inverse of the 61.8 levels. But these two levels, 31.2 and 61.8, are kind of they're called the golden ratio, because you see them in nature all over the place. You see those ratios in a lot of places. The 61.8 or 38.2, however you want to measure it. It's it's like everybody's favorite ratio because you see it over and over and over again in nature. Well, now, so what we have here are what I was about to name this video "Three Strikes You're Out," but I don't know. It doesn't seem really appropriate right now. So what we have here are three separate occasions. These are the monthly. This is a monthly chart. We have it dip below right here, and it found support and continued higher. And then the same thing happened in November. Pardon me. Same thing happened in November, right here. And then the same thing happened in December. So this golden ratio here, and those things look terrible, so let me just get rid of them. It looks like just a bunch of scribbling. So what we have here are three attempts to cross down below this 61.8, and three times where it stayed up above, right? Well, so in the big picture of things here, we're in a bear market, and it's stair stepping down. It really makes sense that the next stair step down really, would be that would continue doing that. But the market can remain irrational longer than I can remain solvent, right? So what's really quite likely here is that we see a move up that squeezes the bears, a huge bear squeeze, and then, or a huge short squeeze, sorry, and then for it to continue down. So, the trend is your friend, right? But this is a huge support level right here. That price exactly is $260, $260.41. This is on my Fibonacci, on the Fibonacci that I have. And this Fibonacci goes all the way back to September of 2002. And in 2002, the Qs were selling for $20.49 a share. So, that's, what is that, a 1,500% increase from roughly where it was then to roughly where it is now. Maybe a little bit less than 1,500%. Not bad for 20 years, All right. Well, and so on this linear chart right here, you can see how it's gone parabolic. It is time for a correction, a major correction. Let's look at on the log. It's just, it's still, 45-degree angle on the log scale. It's not bad, and why not have a correction here? Why not? Let's correct. Let's get some people back in at lower prices so they can make money too, like the millennials. I think it'll be a while though. I think that we are headed down through these levels at some point, just not right now. Not in January, February. And those tend to be the most bullish months of the year, really. December, January, February, and going into March, the market's bullish, and it's just because people are, portfolio managers and so forth are jockeying for position for their portfolios. They're setting them up for the year, so that way they can show their performance against the benchmarks, so on and so on and so on. So yeah, a huge support level here has held for 3 months in a row, 3 times in a row. I imagine that in January into February, we're probably going to see a move back up to this 312 area. Or let's see, the Fibonacci, the next, I use 75% instead of the 72, whatever it is. I've forgotten what it is. 311.66. So I'm going to go back to the daily chart here. One day. And so a move from the bottom here, from this Fibonacci level up to here, that would be a 20% move. And also you can see back here that this 75% level was an area of support and resistance. And I'm a big advocate, or I really like Fibonacci's a lot, just because they do work. They work really well. And so when you get something that works, you stick with it. You know what I mean? So, okay. Let's take a look around here. Yeah, the VIX is still bearish. The VIX has come down. You're not supposed to chart the VIX, but I do anyway. And so here's this sort of support and resistance line on the VIX. And now we're down below it again. I'd like to see this thing break down, even if it's temporary. I'd like to see this thing break down because, I have a portfolio that I like to see do well. 10-year, 2-year is definitely inverted. And it's not until the 10-year, 2-year starts to normalize where we see big crashes. So really, there is a big crash coming up. We do have a crash in our future. Let's see, I think we're 6 months into it now. Let's see, 1, 2, 3, 4, 5, 6 months into it. And these inversions can last. In our past 3 examples, they were between 12 months and 18 months that the yield curve stayed inverted. And the markets can remain bullish while the yield curve is inverted. It did in 2000, leading up to the 2001 dot-com bubble, and the market remained bullish leading up to the 2008 crash for the housing bubble. So here we are. I don't know what you call this bubble exactly. The stimulus bubble, the mad spending by federal government bubble. I don't know. I don't know. I don't know what you call it. I don't know what this bubble will be called. But eventually, the bubble will pop, and we will be heading even further down. It's just where will we be when we're headed further down? Those brush marks that I erased earlier were kind of guesses of where we would be within 6 to 18 months from now, and where it would crash from. So let me kind of get rid of this Fibonacci here, get that out of the way. And so if we rally from this point forward, it's just a rally that's going to set up for the next crash. I mean, really, because it's when the 10-year, 2-year normalizes again that we see the crash. And so a bear market rally, a rip your face off rally that gets us almost all the way back to the top again, would really just set us up for the next huge leg down. So I am bullish for the next 2 months, certainly, January into February, and even into March. But then after that, the ground really gets shaky, especially if this 10-year, 2-year starts to normalize again. All right, everybody. So today I will be looking for bullish opportunities on the Qs. And in order to do that, I'm going to use the 1 minute and the 10 minute, which are very short term. In fact, it's very oversold in the pre-market right now. You can see. Let's see what the VIX is doing in the pre-market. Yeah, and the VIX in the pre-market is going into overbought. So if all four of these indicators start to turn around and the VIX starts coming out of overbought at the same time that the Qs come out of oversold, that'll be a bull trade for me. That's what I'll be looking for today. All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell. I'll see you next year. Have a great New Year's Eve, everyone. Stay safe. Don't drink and drive. All right, I am out.